Hello, hello, everyone. Give me 1 second. Let me just get this all up and running on my page, and we will get going. While I'm getting situated here, if you are joining in, please share this to your page or start a watch party. But thank you for joining us. All right, I'm good. I'm ready to go.
Ready to go.
So today I am talking to Dominic from Liberty Mortgage. I've been working with Dominic for some time over at Liberty. As you know, there's a lot of changes or maybe you don't know, there's been a lot of changes to the mortgage industry. So I have been interviewing different companies, different loan officers to kind of get their take on everything that's going to provide you guys with information. So Dominic, can you please introduce yourself to everyone?
Absolutely. Yeah, like you said, my name is Dominic DeFranco. I work over at Liberty Home Mortgage here in Independence, Ohio. And yeah, so I'm happy to be here, Andrew. I appreciate you having me. I've worked with you, a couple of times on some deals, and it's been awesome every time. So I appreciate you having me out for this.
No problem. So first, I just want to kind of get some feedback from you about, there's been over the last 30, 40-ish days now, how long we've been on this quarantine.
Yeah.
I know you've seen a lot of ups and downs. Can you kind of explain what you've seen or noticed going on in the market?
Absolutely. Well, I think, if we take it back to before the whole outbreak of COVID and when everybody really started quarantining in this country is, when we started seeing rates super, super low. So, I think all lenders across the board, we saw them in mid to high twos to mid to high fours over the past month and a half, 2 months. Then, of course, COVID hit and everything like that. There was a bit of a market scare. And then you started having some big banks and lenders and investors tightening up on guidelines. We obviously just heard last week that, two out of the three of the country's biggest banks, Wells Fargo and Chase, tightened up their guidelines. We know Chase now at a 700 with minimum 20% down, and Wells Fargo's at a 680 for all loans. So, typically when you have one or two big lenders or banks or institutions like that, more follow suit. So we definitely have seen a little bit of tightening. But I try to be a little bit hopeful, and I think even our owner, Hesh Sagafi, is relaying a hopeful message and saying that things are hopefully going to turn the corner here soon after May 1, and we'll see some things starting to be lifted as far as the restrictions and everything like that.
So one of the things for everyone that's listening that I like about Liberty Mortgage, if you didn't know, they are a local business here in the Cleveland market. And the owner is very supportive. He treats all of his employees very well. So I definitely like to support local businesses. So any way that we can. So in terms of Liberty, what are you guys seeing as far as a minimum credit score?
Well, I mean, honestly, Andrea, it's funny. I had this conversation with Hash this morning. And there's two ways you kind of have to look at it. I mean, one, there's the guideline book, and then there's reality. I mean, FHA, the reality of, the guideline book says, I mean, technically FHA, you can go down to 500. You want to be able to say 580 with your minimum down. You have the potential. But the reality of it is now with what's going on, the chances of being approved below that 620 with minimum down with just your down payment in the bank, let's say, getting through Fannie Mae's desktop underwriter, everything like that, it's a little bit tougher right now. Not to say it can't happen. Typically, you're going to find the easiest shot at approval with just down payment funds and maybe a month or two of reserves in the bank. If you're around that 640 plus. We do have loans in the pipeline that are below 620, but it's pertinent to every situation. It's case by case. And that's what I tell my clients, because, if you have a 401k with additional vested interest in that acts as cash reserves, and the system sees that, and you have a better likelihood of being approved. But I want to say 600, but at the end of the day, it's case by case. Typically between 600 to 629-ish to 620 to 629-ish. You need a little bit more money in the bank, maybe in cash reserves and like a 401k or something like that. But yeah, I mean, that's where we're at. So we haven't really, seen anything where we're like, hey, we're like Wells Fargo, like 680 or up, else we're not even looking at it. We're still, as long as we can get through desktop underwriter and Fannie Mae, and we can make everything work with debt ratios and credit and all that, then I mean, we're still, like I said, below 620. We've still been running loans, between 600.
Which is amazing, because I have talked to a couple different lenders, and everyone is kind of inching up to at least, I think I've heard another like 640 and now 670 in many cases. So definitely you guys at Liberty are leading the pack on being able to get people approved at those lower amounts. Absolutely. So can you tell me, what can people do to prepare to purchase a home? What would you suggest if they are thinking about buying, maybe this summer even? What should they be preparing to do?
Absolutely. So, I mean, I think, if you're asking that question in general, I think it's still even relevant and similar to how I would answer it now amidst the COVID issue and stuff like that we're facing. But with what's going on now, I think the biggest thing is obviously just ensuring that you still have employment. That is the biggest thing, and making sure you're still receiving consistent pay. Here's the thing that's tough. Oftentimes, a lot of people like to get pre-approved with their additional income, as far as overtime income and stuff like that they have on their actual income records. Tough to have overtime income that you can average out right now, especially over a 2 to 3 month period if you're out of work. So biggest thing is just ensuring that if you are laid off from your job, you have, whether it's from the company in writing or verbally, stating that, when this lifts, you do have a job. If you're actually out of work or fired, that's different. So we actually still can approve you knowing you're laid off and knowing that you have that job when you return, and we can approve you based on that base rate that you had. But I would say the biggest thing now is, of course, income, and making sure you're still consistent with your income. And then obviously beyond that, Andrea, it's working on credit as much as you can, because with the way we look at credit-based risk adjustments when it comes to interest rate, which is totally determinant of risk based for each individual, the higher your credit, obviously, like we just said before, that 640 plus, you're going to have a better pricing tier, when it comes time to lock your loan and everything like that. And it just makes everything a lot easier for you. And of course, too, credit, income, assets, it's having money in the bank, additional reserves stored up to help yourself out. And I think we're recognizing even more so now how saving is such a pertinent thing to do. Yeah. And to be more conscious of when this does raise up, because you never know when something like this is going to happen.
So part of the reason why I want to kind of bring people on, I've talked to credit repair people and everything, is because a lot of times we're getting to the closing table and people are close to through underwriting and really just praying that it's going to go through. And just to share with you guys, I'm trying to give this information to prepare you ahead of time so that you don't have to pray for it to go through, that your credit is good, you have the savings. So it's just a slam dunk. And and you're not paying more in fees because of a lower credit score. Now you have to pay more interest, or you're trying to buy down your rate. And it's just, it doesn't create a good situation. I did have this question yesterday. I had a young lady, she wants to buy a home. She's currently employed, but she accepted a new job. So let's just say she's going to start her new job May 1st. I don't know that to be the date exactly. So she has a letter from her new employer that of her new start date and her pay increase. So she wanted to know if that letter was good enough. So like if she gets that pre-approval now, could you use that future income as part of her approval?
That's a great question. And yes, what we can do, this question, the answer to it's twofold. One, you have the pre-approval and then closing. Pre-approval, absolutely. That is sufficient documentation as long as we have an official offer letter signed by them, not just a statement of like, hey, here's what we would like to give you. Let us know if you accept, but like, hey, it's accepted. Here's the start date. You pass all your pre-examinations, whatever's taken. You're going to be hired on this date at this pay rate. Yes, we can pre-approve you at that income amount, as long as your history of income also satisfies, the specific guideline criteria. And then, of course, closing. I've had clients who have switched in the middle of a process And typically they want to see underwriting and guidelines are going to call for one pay stub before closing and funding at that specific pay rate to show that. So pre-approval, not an issue at all. You don't need the pay stub yet. You don't even have to have started it legitimately.
Okay.
The offer letter suffices. For closing, though, you are going to need at least one pay stub just showing that pay rate, unless you have a lender where they're okay with holding it, and then you have a post-closing condition if it send it maybe like a couple days after closing.
Okay. So typically, how long do you like to see them on their job?
Yeah, well, it depends because there's different scenarios as far as with W-2 employees, 1099 employees. Like I said, I've had people legitimately in the process switch 2 weeks before closing, but they've been in the industry for a while. And they switched jobs because it was simply an increase in pay, which is obviously very easy to put in a letter of explanation that, hey, you switched jobs this late because of the fact that it was an increase in benefit to you. Maybe you got more health benefits, it's closer to home where you're purchasing, or increase in pay, which was this borrower scenario. Like I said, 2 weeks before closing, and it was fine. We had no issue with it because we had the official offer letter, and we knew right after closing we'd have a pay stub from him. 2 years is what we have to satisfy, obviously, per guidelines.
Okay.
Schooling can be a part of that.
Okay.
Right now, who was just in school, graduated, at the end of 2018, started working in 19. So you can use school as part of your history. You need to be able to add up 2 years without a ton of job changes in between, typically no more than two. And industry. I mean, basically the biggest thing we look at too is if you're switching jobs, what kind of industry and why did you change? Did you go back to school? Did you get a different certification? Was it a benefit because of you were trying to increase your pay and help yourself out where there added benefits from the employer? So that's typically how we approach it. Okay.
And then in terms of a down payment, how much money should they prepare for a down payment?
That's a good question. So, with the 4 loan programs that we have available, that basically every other lender in the country has available, that's VA, if you're a veteran, that's a no money down loan. USDA, which we don't find a ton of here in the Northeastern Ohio area because that is more so for like rural housing. So for you in Ohio who know the areas, if you go more so towards like Chardon and Aurora, that'll give you an idea of what USDA is, a little bit away from the city. Those are 2 no money down options. Okay. A little bit more restrictions with those, but straightforward, those are the no money down. Conventional is your typical, 20% down, 700 plus credit, a lot of cash reserves in the bank, usually bigger down payment. They do have programs, though. Home Ready is one of them where you can be approved for 3% down. There are income limits on that, but FHA is typically the easiest one to get approved for with the lowest down payment and less than perfect credit scenarios. It is 3.5% of your purchase price. So take any given purchase price you look at online, multiply that times 0.035. That'll give you just your minimum down payment.
Okay. So how long should people expect for this process to take?
Getting pre-approved or purchasing in general?
Well, both.
Okay. Well, pre-approval, I mean, as long as you have your income docs ready, I can get it done in one simple conversation. Have a pre-approval letter out to you within, the same hour we're on the phone. Typically it takes a day for most people just to get all the documentation over because we do it a little bit more thorough than most companies up front just to ensure we're giving you a pre-approval letter that you can have a little bit more confidence in. And you're taking care of more so of the items up front than on the back end, which is like you just mentioned, where you run into issues. And then beyond that, I mean, Andrew, we're still closing loans. I mean, we have everybody working remotely. We're a little bit smaller of a company, obviously, so we're able to keep everybody very, very close and intact, not a big corporate company. So we're still closing loans in 30 days or less. So it just depends on the scenario, too. I mean, there's always exceptions that can be made. Some people want to move in 45 days. But for those that are, I have contracts that are 25 days and we're getting them done.
Okay. So that's important. I'm glad that you mentioned that because a lot of people think like, oh, nothing's closing, nothing's moving, and deals are still being funded. Appraisers are still going out. Home inspections are still happening on these properties.
Absolutely.
So we're still moving. So if you are a buyer and in a position to buy, you're still going to work every day, it's probably a better time for you to look at homes right now because there's a portion of the population that cannot buy, even though they may want to, but they may be on unemployment or furloughed right now. So definitely a time to think about that. one of the things, can you just talk about buyers and those interactions that you're having with the documentation? I think that part of it is important because sometimes, as the agent, I'm waiting for that pre-approval to the point of, we know looking at the numbers, they pretty much can get approved. But now we've gone out to see a property and maybe they forgot to give you bank statements or some other requirement to give that final approval. And we've been in a situation where now we've gone to see a house, and in this market with the inventory being a little low and multiple offers coming in, we've lost out on a property because they didn't have all of their paperwork done. So can you just talk about that just a little bit more, the importance of gathering that information? I know sometimes with pay stubs and direct deposit, people, I think pay stub wise, they don't have access to them, so it drags out with the importance. And maybe if you're pulling from 401k, what they should be prepared for when pulling 401k money as part of that down payment.
Absolutely. So, I mean, when it comes to the documentation, like I said, we're a company that does collect everything up front because we want to give a little bit more. We want our pre-approval letter to carry weight, and it certainly does. And I think you know that as well. When you have that down with an offer, you know that we have done our due diligence. And the reason we do that, and trust me, I hear it from clients sometimes. I was on the phone with this lender, and they didn't collect all this up front or ask this. Well, that's why we're different. It's because we actually take the time to ask questions that we know can burn us all in the back end. When I receive a contract, I take that very personally and take a lot of pride in that and understand that I'm not only trying to get that done for, of course, my own sake and the fact that this is how I earn a living, but also the fact, too, that I have you involved on it. I have a listing agent. I have a buyer. I have a seller. There's a lot of people that are relying on the buyer's lender to get this done. If we take care of everything up front, ensuring that there's no garnishments on pay stubs. You don't have a 401k that you're obligated to pay back that's taken away from your pay stubs. You don't have any delinquencies in any government loans, or you're not even on any payment plans for back taxes owed to the IRS for, let's date back even 10 years. These are all things that you get near burned on a deal. You're going to start asking those questions up front. Our company model is simply just being able, with the pre-approval, is ensuring that we're giving confidence behind that letter. So yeah, we're going to ask a little bit more questions, and we're going to ask more in-depth questions, and we're going to review a little bit more, because at the end of the day, like you were saying, in a multiple offer situation, you want to be able to give confidence behind that. And if I'm getting a call from a listing agent, which happens all the time, and they say, hey, what kind of work did you do for this pre-approval? Did you review all this stuff? I can go off the list and say, yeah, I collected W-2s, pay stubs, tax returns. I verified that, they have their down payment ready to go. I ran them through Fannie Mae's desktop underwriter or loan prospector. We've done all of this, so I can give great confidence relayed to the selling agent. And I've had offers accepted because of that, because I get that call and I'm able to explain that our company does a little bit more in advance.
Yes, it definitely makes a difference when you collect that information up front and you have, as a realtor, and we get in, and you have a listing on a property, the first thing that we do as agents, and we are going to ask for that pre-approval from that buyer when that offer comes in. And if it's not a lender or a mortgage company or a bank we're familiar with, we will then call that loan officer and ask these questions like you mentioned, because we don't want to put our sellers in a situation of accepting this offer for a deal to fall through down the line. And Absolutely. So it doesn't serve anyone at that point. It doesn't serve the seller. It doesn't serve you as the buyer. So definitely when you see like a Liberty Mortgage pre-approval letter, I know that is solid on there. So that's very good. So what can people expect just in the overall process from taking that loan application to the end when they're working with you guys?
Okay. Well, I mean, let's just start from the initial phone call. Oftentimes I get on the phone with a lot of, first-time buyers who are a bit timid about the process, not sure what it requires. They're afraid of a credit check and giving their bank statement, this and that. Ultimately, I try to tell them it's almost simpler than getting pre-approved for a car. Being a private lender, we're not a broker, so we're not going to send your info out to all these different lenders that try to get you approved and this and that. It's one single mortgage inquiry. you know, which has very little to almost no harm on credit. I've had people actually tell me, hey, a week later, you know, from pulling my credit, my score went up. Can you check it again? And in fact, it does go up. So, you know, once you get past that fear there and everything like that, you realize that getting pre-approved is really not that hard. I mean, like I said, I've gotten people pre-approved as long as they have their documents. I've gotten them pre-approved in an hour or less. And that's the legitimate pre-approval, running them through Desktop Underwriter, reviewing income docs, all that. And then after that begins the fun. They get set up with somebody as great like you, and they go and start looking for a home. And once they find something they like, they make an offer on it. And we do try to, you know, typically for most buyers, put in some seller paid closing, some seller's concessions, which I'm sure you can, you know, tell all your clients about and everything like that. And then from there, once the contract is accepted, the offer is accepted, you're signing a few things. We exchange the contract. I get things in the system. We disclose out some loan disclosures up front, and then you're letting us go on our 25 to 30-day process of underwriting, ordering the appraisal for you and everything like that. So typically the most work comes when you're doing the pre-approval. When you get the loan disclosures up front, you have to e-sign some things. And then once you get the conditional approval from the underwriter, that typically happens about 2 weeks, maybe, depending on the closing date after you get the contract disclosed to you. And then from there, that's where you're collecting, you know, the pieces to the puzzle that the underwriter sees that they want to complete the full finished product and give you the green light to clear to close. So it's really not that difficult of a process. I get there's a lot of angst given to it, but also I mean, you gotta make sure you're working with the right loan officers who know how to put out the flames and stuff like that and ease the stress. Right.
So someone did ask, can you talk more about using or borrowing from your 401k for down payment?
So when it comes to using your 401k, you have to look at your specific 401k servicer, so Fidelity, or maybe somebody through work or John Hancock or whatever it might be, okay? You have to look at their specific terms of withdrawal, okay? Oftentimes, I've used clients Fidelity before, let's just use. They have their terms of withdrawal being you take a loan. Okay, so that's your money. So that's actually when you take a loan against on your 401k, we actually do not have to count that towards your debt to income ratio on a monthly basis of what you're obligated to, because of the fact that that is your money that you've invested already. Okay, I've had clients who are able to take at no penalty because of the fact that it's for a first time purchase. All they had to do was actually just verify to the company like Fidelity that it was for a first time purchase. In other words, what they had to do in this specific scenario was send them the contract and also have them wire the money, not to their bank account, but straight to the title company. I had a client who closed in March over here in Shaker. She liquidated a good portion of her 401k just to help with the down payment closing and also for moving expenses and to pay off a different 401k loan. So she had two 401k loans. The second one used to pay off the first. So there's the options to do that. It took her about 10 days from liquidation application to receiving that check in her bank account. So you do want to give yourself enough ample time. Beyond that, what's very nice about a 401k, which is why you should always tell your lender you have a 401k, is even if you just have your down payment funds in the bank, if you have no loans on your 401k, we can take 60% of that balance. Okay, so let's say it's $1,000. We can take $6,000 and use that as what's called $600 and use that as what's called vested interest. Vested interest acts as as like a liquid cash reserve you have in case you have a hardship. You could take that money out and use it to pay for a mortgage. If you have a loan against and you plan on taking funds out from your 401k, we would take that overall balance minus the loan times 60%, and that's even used as the vested interest, which is cash reserve. So always let your lender know you have a 401k, because that's going to help you have way better chance of getting pre-approved. And like we said in the beginning of this conversation, give you much better odds of getting approved with less than best credit if you're like below the 640, 630, dipping down into the low 600 range. It's going to give you a lot better opportunity.
Yeah. So the biggest thing that from my experience on my side as well, it's important if you know that you're pulling funds from your 401k, it's important that you do that immediately. Do not wait to do that, just because a lot of times you have to submit paperwork to your 401k company. And so it takes some time for them to process that. And I've seen buyers on pins and needles because it's getting very close to their closing date and they're still waiting for a check or a deposit to come in to access those funds. And then the other thing that I've witnessed too, because some people may have changed employers along the way, so they may have funds for 401k dollars in a couple different plans, and so now they're scrambling trying to pull down all of those dollars from these various sources. So that's something to maybe even look at right now while we're down, things are a little bit slower, and to pull all of those into like one account, or just kind of streamline it if you don't want to put in one account, and organize it so you're in a better position that not even just buying a home, doing anything, you have it already lined up and ready to go.
Absolutely.
So is there anything that you want to share with the audience here that maybe I didn't ask you that you think is important?
I mean, honestly, the biggest deal is, get on the phone with somebody. And, I would say myself too, just because, the biggest thing is you want to talk to somebody where, it's a little bit more conversational. So the best way that and here's what I would say to anybody out there who's looking to talk with somebody, call around a couple different places and just gauge the conversation. A lot of loan officers, what you will see is they approach it in a very transactional way. You can tell they're just trying to go through the application to get information to try to figure out what it is they need to get in order to benefit themselves, okay? And they kind of leave you in the dark. The way I approach my conversations and the way you should expect to be treated is a little bit more as if it's a collaboration. You have somebody on your side who's walking with you step by step, hand in hand, to ensure they're explaining things to you, because at the end of the day, once I close somebody's loan, I'm going on trying to get more business. It's your loan you have for 30 years. I want you to understand it. So make sure you're talking with somebody who treats it more so less as a transaction and more so as a collaboration. Biggest questions I ask up front is, and I don't think a lot of loan officers ask it, is, why is now a good time to buy? You're paying this in rent. Are you okay with the payment going up $300? Hey, we look at gross income. What about net income? What about after you pay taxes and you have to fill your refrigerator, your pantry with groceries, or pay for your cell phone bill, or even gas at the gas pump? So the biggest thing is just making sure, I think, it's getting on the phone with somebody who is truly going to kind of, go above and beyond for the service to provide for you what it is you need. Because it is a big purchase. I understand that. I mean, it's a very big purchase. I'm not even a homeowner yet, but I see the process and I get it. And I love helping people buy homes. I can see why it's daunting. It's a little bit less for me, obviously, because I do it every day. But nonetheless, it's very important you get on the phone with a loan officer that you feel you could pick up the phone on a Sunday and call them and they'll actually answer and not be like bothered.
Oh yeah, that's important. The weekend loan officer definitely is of benefit. So one of the things you didn't mention that I want to make sure everyone knows, some of the audience here is not in Ohio. So Liberty Mortgage, and they're really licensed in multiple states. So Dominic can probably help you. How many states are you licensed in?
Oh gosh, I have Ohio, New Jersey, North Carolina, and Washington.
Okay.
I say that's those 4 or 5. But we're pretty much across the border. So I think there's very few that we're actually not licensed in yet, and if we're not, we're actually working on it. So we're almost all 50 states. So yeah, we can help a lot of people, especially in the resounding Midwest area here. So
perfect. So thank you everyone for joining us today. Thank you, Dominic. People ask all the time about mortgage questions, how to get approved. So feel free to reach out. I'm happy to answer those questions or connect you guys with someone that is trusted, because that's the important thing. You don't just want to call anyone. So I'm available. You can DM me. You can reach out to Dominic. How can they reach you, Dominic?
Anybody can call me on my cell. My cell phone line is it's 216-973-4206, and that's the same number I call my parents on, talk to my family on, friends on. So it's always, I always tell people, Andrea, even if I don't end up earning your business, and I mean this wholeheartedly, I am always here as a backboard for you to bounce things off of, to know that you're at least getting an honest answer and honest information. That way, you know, you're being pointed in the right direction. I have no issue telling you that, yeah, that company is actually doing, they're saying what they're saying. That's right. And you're in a good position with them. I have no issue with that. So, and I think people need that. And want to know they can at least rely on somebody who's going to always be there to say, yeah, this is correct.
Right.
Or, you know, you could be in a better position. So.
And what about social media? Are you on Facebook and Instagram?
No, I'm on Facebook. I want to say it's Dominic. It's just my name, Dominic DeFranco Jr. Yeah, that's pretty much all I have. I stay off the social media. I really do. So, but Facebook is where I'm at.
Okay. All right. Well, thank you, everyone.
Thank you, Andrea.
Right,
Thank you. Take care.
You too.